Welcome to Money Matters, the podcast that explores all things finance, from budgeting and investing to managing debt and building wealth, providing expert insights and practical tips to help you navigate the complex world of finance in English. Here's your Bank of England news update. First off, Governor Andrew Bailey has dispelled the idea of potential interest rate reductions despite pleas for extra stimulus to weather the ongoing pandemic. Bailey is of the opinion that the current interest rates are adequate and there may not be a need for further cuts. However, the Bank of England has expressed concern that the markets are underestimating the risks associated with inflation. As the economy gradually bounces back and fiscal stimulus plans are put in place, the threat of a rising inflation rate looms. This wary posture from the central bank may indicate a modification in their monetary policy direction. On another front, UK's borrowing for this year has been £16.9 billion less than projected, an unexpected lift to public finances. This could be credited to a more robust economic recovery than expected and an upward shift in tax revenues. Despite this positive news, there is still ambiguity surrounding the long-term implications of the pandemic on the UK economy. Also weighing in on the country's economy, Deputy Governor Dave Ramsden mentioned that the ambiguity spawned by Brexit has resulted in a freeze on business investments in the UK. This uneasiness and unsureness concerning future trading has caused businesses to delay significant investment decisions, leading to a slowing down in economic growth. In consequence, Ramsden has also drawn a line between the Bank of England and market rate expectations. He underscored that the central bank's interest rate decisions will be governed by the holistic economic landscape and not by market speculation. On the trading floor, the FTSE 100 started on a cautious note in view of ongoing market unpredictability and the forthcoming Bank of England's interest rate commentary. Investors are keenly observing any cues from the central bank that can mold market sentiment and direct investment decisions. That concludes our Bank of England news update for today. Keep following for more updates on the newest economic events. In Federal Reserve news, the US dollar, after suffering previous losses, has now stabilized. The prior losses were due to expectations that US interest rates may have hit their peak. However, the dollar is predicted to persist in its weakness as US interest rates continue to ascend to their peak. In technology sector news, Nvidia, a Paramount graphics processing unit manufacturer, has announced a tripling of their revenue in the latest quarter. Despite this, the company's stocks suffered a decline and failed to impress investors. Doubts have been cast on Nvidia's capacity to reignite its momentum by its Q3 earnings, due in part to the ripple effect from the Federal Reserve meeting minutes on the stock rally. Turning to currency markets, the pound sterling has been on a rollercoaster ride. It hit a 2-month high in anticipation of an interim budget announcement, but subsequently fell in value against the euro. These fluctuations are reflective of the increased uncertainty tied to the Brexit process and its assumed effect on the UK economy. That winds up the most recent updates in the Federal Reserve, technology sector, and currency markets. Stay connected for more news developments. In our latest roundup of Barclays news, we've compiled updates on their PE ratio, stock holdings, and market assessments. One vital financial metric that aids investors in identifying the relative worth of a stock is the price-to-earnings, PE, ratio. This crucial factor has been under the watchful eyes of analysts to understand Barclays' market performance and potential investment opportunities. Additionally, Barclays recently made headlines with their upgrade of NatWest Group shares to overweight, indicating a positive outlook on the financial institution's performance. They see significant potential in NatWest Group, with the expectation that it will outperform the market soon. This news may hearten investors contemplating including this financial institution in their portfolios. In a forward-looking investment move, Barclays plc has boosted its stock holdings in biotech company Dyne Therapeutics by a hefty 155.5%. Dyne Therapeutics is widely recognized for their work developing treatments for patients with serious muscle disorders. Barclays' significant increased investment echoes their faith in the company's prospects and proven technology. The financial dividends this move will yield in the future are a development to watch. That concludes today's key updates from Barclays. Be sure to stay updated for more news on crucial happenings in the finance and investment world. In our next segment on BBC News, we delve into the economic issue of government borrowing and its implications, particularly in the context of the UK. As the UK government strives to sufficiently fund public services and investments, borrowing is serving as an essential route. However, it's worth noting that this approach has significant effects, impacting not just the economy as a whole but also individual households. In conjunction with this discussion, we will examine the UK government's revenue and expenditure. Taxes, as the primary source of income, necessitate a careful equilibrium between spending and income to maintain economic stability. It's critical to understand how these finances circulate within the system as they directly impact public services and national economic health. In another important financial update, Martin Lewis, the financial expert, recommends everyone to double-check, as they could potentially claim a £48,000 state pension handout. Lewis emphasizes the need to thoroughly investigate any inconsistencies or gaps in pension contributions. Following this advice could be beneficial, especially for those who are unaware of their potential entitlements. Simultaneously, as government borrowing escalates, concerns over the economic state are also increasing. The forthcoming autumn statement, set for the 22nd of November, might unveil intentions for tax cuts, despite the rise in borrowing. The intricate task facing the government is finding a middle ground between reducing spending and stimulating the economy through proposed tax cuts. Even with possible tax reductions in the autumn statement, many might find themselves grappling with higher income taxes. This worrying prospect could impose an additional financial strain on individuals and households. In the following weeks leading up to the autumn statement, the UK's critical financial balance remains under scrutiny. Stay tuned as this news update comes to an end, as we continue to provide more information and analysis on these critical financial matters. In significant Binance news, the world's largest cryptocurrency exchange is grappling with hefty legal challenges. Founder Changpeng Zhao, also known as CZ, has decided to step down as CEO and plead guilty to money laundering violations. His departure follows considerable penalties, including a record-breaking fine paid to the U.S. Department of Justice, DOJ, resulting from a settlement deal. The consequences of CZ's exit and the implications of his admissions are shaping a critical phase for Binance. This major development, in conjunction with recent investigations, has resulted in Binance and CZ being faced with considerable fines, $4 billion and $50 million, respectively, under charges presented by the Commodity Futures Trading Commission, CFTC. These charges concern alleged criminal acts and insufficient basic safeguards. Subsequently, the Securities and Exchange Commission, SEC, is demanding an additional $4 billion settlement from Binance in relation to a separate criminal case involving similar allegations, such as money laundering violations. The potential resolution of these cases could critically impact Binance's future functioning and its reputation as a whole. To manage the significant shakeup within Binance, Richard Teng has been appointed the new CEO. With his leadership, the company seeks to renew trust and ensure regulatory compliance. The ongoing legal proceedings have strongly affected the cryptocurrency market. The company's native token, BNB, saw a surge by over 7% following the announcement of the potential settlement between Binance and the DOJ. However, intensified regulatory scrutiny and enforcement actions have broadly impacted market sentiment, causing fluctuations. As details of the DOJ's settlement with Binance, one of the largest corporate penalties in U.S. history, are yet to be released, the market looks on with anticipation. The changes in leadership and subsequent regulatory adjustments signify a momentous turning point in Binance's future and the crypto market overall. Stay tuned for forthcoming updates on this developing story. The co-founder of the leading cryptocurrency exchange Kraken has openly criticized the U.S. Securities and Exchange Commission, SEC, and encouraged industry peers to consider exiting the United States. This comes in the wake of the SEC suing Kraken over alleged registration failure and blending of customer funds. Similarly, a U.S. senator has expressed opposition to the SEC's regulatory approach towards Kraken. The SEC has charged Kraken of functioning as an unregistered investing platform, thereby breaching the Securities Exchange Act of 1934. However, Kraken maintains that they have complied with all applicable laws and regulations. They deny any fraudulent activity or mishandling of funds. Despite ongoing legal disputes, the co-founder of Kraken continues to critique the SEC's decision to indict the exchange. Notably, this controversial situation underscores the intricate difficulties encountered in the emerging field of cryptocurrency regulations. Simultaneously, the SEC has filed a lawsuit against Binance, another high-profile cryptocurrency exchange, for allegedly transgressing similar regulations. Binance is potentially facing an enormous $4 billion settlement following recent Bitcoin and cryptocurrency market fluctuations on November 21, 2023. In the latest BlackRock news, we address the potential national security concerns linked to the global investment management corporation's expanding financial influence. As BlackRock's reach extends across several sectors, the potential implications this has for national security and democracy are under increasing scrutiny. A major concern circulates around BlackRock's penetration into the crypto market. The firm's investment strategy involving cryptocurrencies has provoked discussion, leading to questions about the possible vulnerability this could generate towards national security. Critics argue that the lack of regulation in digital currencies, coupled with BlackRock's substantial financial sway, may yield far-reaching consequences potentially threatening security and stability. In line with this, the financial titan is also aiming to step into the spot Bitcoin ETF market. BlackRock, among other key industry figures, is preparing to break into this market, predicted to hit a remarkable $100 billion in value. This action emphasizes not only Bitcoin's increasing acceptance into the mainstream but also symbolizes BlackRock's ongoing expansion into novel and rising markets. Despite these advancements, BlackRock has encountered hurdles. Most recently, the company opted to shut one of its emerging market funds due to disappointing value assessment outcomes. This decision is part of BlackRock's effort to refine its portfolio and simplify its investment products. As BlackRock continues to mold global markets, the ramifications for national security, democracy, and the entire financial industry become increasingly pertinent and warrant thorough investigation. Keep an eye out for future updates on BlackRock's developing prominence in the finance arena. In the latest Bundesregierung news, the German federal government is grappling with substantial fiscal concerns following a recent constitutional court verdict, or Verfassungsgerichtsurteil, that could inhibit initiating additional billion-dollar projects. To address these financial challenges, prominent politician Friedrich Merz proposed budget cuts as a way forward. Adding to the complexity, the German Ministry of Finance has instigated a spending freeze on multi-year projects. This move is a direct reaction to the Karlsruhe Court's ruling, which has restricted the government's capacity to engage with costly projects. These developments highlight the severity of the German federal government's financial predicament. The government's course of action to navigate these obstacles and ensure the country's financial stability is yet to be determined. As it stands, the situation underscores the substantial financial difficulties faced by the German federal government. In our latest DAX update, the German stock market, more commonly known as the DAX, battled today for gains but closed practically unchanged. Despite a promising start with a slight gain fueled by positive signals from both Wall Street and the Asian market, augmented by lower yields in the US Treasury market, the DAX wrestled in its progress to reach the notable 16,000-point mark. Even with Wall Street's positive performance, it struggled to garner the necessary momentum to transcend this threshold. Investors and analysts maintain their cautious stance, attentively looking for any potential catalysts that might push the market to breach this barrier. Thus, the pursuit for the 16,000-point milestone continues within the German stock market. In the latest Goldman Sachs news, there are several significant updates from the investment bank. First off, Goldman Sachs forecasts that Chinese stocks are set to make their first annual gain in 4 years in 2024, on the back of accommodative policy measures and steps to alleviate property deleveraging. As such, the Chinese stock market is experiencing a positive shift, presenting a potentially lucrative opportunity for investors in the following years. Moving to the digital banking sector, Marcus by Goldman Sachs, the bank's digital platform, has upped its short-term CD rates. It's a strategy intended to lure more clients with competitive rates to park their short-term savings. This recent change indicates Goldman Sachs' drive to broaden its digital banking footprint and offer attractive savings options for its customers. Finally, as easing travel restrictions lead to recovery in the aviation industry, Goldman Sachs has singled out what it deems to be the best airline stock to purchase in what they see as an undervalued sector. By pinpointing a specific airline stock, Goldman Sachs aims to assist investors in seizing this opportunity for potential substantial returns. The latest news and insights from Goldman Sachs offer a snapshot of the bank's strategic analyses and perspectives on assorted markets. Remember, it is always vital to perform comprehensive research and seek professional advice before investing. Keep an eye out for more updates on Goldman Sachs and other financial news on our podcast. Stay tuned. We have some interesting updates concerning Mastercard. Firstly, in their latest move to bolster security, Mastercard has entered a partnership with FTSE, a frontrunner in fraud prevention technology. This alliance specifically aims to amplify protective measures against cryptocurrency exchange fraud, a domain that has been susceptible to deceptive activities in the past. In other related developments, Mastercard has notably penetrated China's payment market, signifying a significant breakthrough. This entry not only epitomizes economic collaboration between China and global financial players, but it also potentially indicates a shift in China's receptivity towards international financial entities. A reflection of this change is evident in Chinese President Xi Jinping's stated readiness to fortify economic and diplomatic relations with the United States. Moreover, China has green-lighted Mastercard's joint venture to proceed with bank card clearing operations, signifying another step forward in the liberalization of China's financial market. This progression enables Mastercard to cement its presence in China, reflecting the nation's commitment to opening up its financial sector to international players. These latest turns of events underscore Mastercard's dedication to heightening fraud prevention safeguards while simultaneously expanding its footprint in the Chinese market. As these collaborations and market entries unfold, they promise to significantly shape the future of financial transactions and global cooperation. Keep your eyes peeled for more updates on Mastercard's movement in these areas. In the latest news from the Securities and Exchange Commission, SEC, cryptocurrency exchange Kraken is the subject of enforcement actions by the SEC for the alleged sale of unregistered securities and for combining their funds with those of customers. Faced with a lawsuit by the SEC for operating as an unregistered securities exchange and for commingling customer funds, which is considered a securities law violation because it risks customer funds, Kraken has chosen to counter, making plans to defend itself in this lawsuit. Meanwhile, executives and legal team from Grayscale held a meeting with the SEC to discuss the potential listing of their Grayscale Bitcoin Trust, GBTC, as a fully regulated financial product. This signifies Grayscale's intent to secure official recognition for their Bitcoin Trust. Simultaneously, SEC Chairperson Gary Gensler has come under fire from Congressman Warren Davidson over the tensions between the SEC and the pro-XRP attorney community. These factions feel Gensler's actions and stance have adversely affected not just XRP but the whole spectrum of the cryptocurrency industry. Also making headlines are the views of New Yorkers on cryptocurrency and SEC regulations. Many feel that the SEC is complicating matters in their battle against cryptocurrency, setting up unnecessary hurdles for the growth and innovation in the crypto sphere. This concludes the current updates from the SEC. Stay tuned for more information on these progressing situations. In recent Tether news, the contentious stablecoin company stirred the cryptocurrency world by depositing a massive $1 billion with a UK-based firm, Britannia Financial. This unusual move, currently under scrutiny, has sparked an intense legal dispute in the High Court of London, turning the $1 billion deposit into a primary point of contention and attracting significant attention from industry observers and regulators. The reasons behind this massive investment remain unclear. Coinciding with this, Tether is also caught up in an investigation by the U.S. Department of Justice, DOJ. As part of its crackdown on unlawful activities, the DOJ has frozen $225 million worth of Tether's native digital currency, USDT, linking it with a suspected romance scam. These events underline Tether's struggle to uphold integrity and compliance in the market. As all eyes turn towards Tether, the company's huge deposit with a subsidiary of Britannia Financial stands as a major point in the ongoing legal battle. The conflict's outcome in the High Court could bear extensive implications for Tether, potentially affecting the stability and reputation of one of the market's most discussed cryptocurrencies. Further developments of this case will reveal how Tether will tackle these obstacles and the potential impact of the court's decision on the cryptocurrency landscape. Stay connected for continuing updates on this unfolding story. Thank you for tuning in to today's episode on finance, where we explored money management, investments, and strategies for financial success.